the crazy thing about that is, most of you probably understand, banks run what's called fractional reserve books. The large banks keep about 12 cents in cash for every dollar of demand deposits, and the smaller banks keep 8 cents in cash. Very obvious how unstable that will be when you get crypto depositors that can be withdrawn in the span of minutes, and those bank runs would be faster than Silicon Valley Bank if we had traditional banks issuing stablecoins. So the good news is that
you, I think, understand better than most the intersection of Bitcoin, stablecoins, the traditional banking system, and institutional investors. And when we first met, you were all over it. You said, look, this is a lot of my background, this is a lot of my personal interest, like this is an intersection point that's gonna be very important. You started a company to go after this. And pretty much the Federal Reserve and banking system has done everything they possibly can to stop you.
yes,
Tell us what happened.
tried to kill us multiple times.
Okay, tell us what happened.
Well, the history is, so we're 7 years in now to creating a special purpose depository institution charter and a legal and regulatory regime in Wyoming. Wyoming was the first state, which is where I grew up. I was in New York for 30 years. But Wyoming was the first state to define digital assets as property and to create the commercial law regime for digital assets. And the rest of the country, about half of the states have subsequently followed. So Wyoming did some really important things for this in the United States. And was working with the Fed at the time. They were meeting every week. And the first group to apply for this special purpose depository institution charter was Kraken. I was trying to bring a whole bunch, this is a passion project for me, I was trying to bring a bunch of people to Wyoming to get this going. And then the Wyoming Division of Banking said, there were 150 different groups who tried, and none of them would have gotten through the Fed. So I thought, well, I was managing director on Wall Street for many years. I can kind of shepherd it through and try to solve the debanking problem that we knew this industry has gone through many times. And frankly, part of the difference between Coinbase and others, if you go back to 12 years ago, was the first debanking cycle in crypto. Coinbase survived because when they lost their Silicon Valley Bank account, they were able to get a Cross River account spot because of the Andreessen connection. Those sorts of things mattered to who won in this industry. And durable banking services is something that we still haven't solved, unfortunately. So long story short, it was friendly until FTX. And Sam, I will speak out very, very loudly against any attempt to pardon that man. That man caused a lot of damage to a lot of innocent, good people in this industry.
I think you're now allowed to talk about some of the details, given that the political change that's occurred, not just from the administration, but I think just generally people are kind of going back to some common sense.
Yes.
What were they doing to you? And just so everyone understands, I'm an investor.
Yeah.
I was getting the updates, and every update I got, I was like, it can't get crazier than this. And it kept getting crazier and crazier and crazier.
The level of corruption in the United States is staggering. And I did not fully grasp it until I saw it. And it's not over yet, Anthony. I mean, you know more things than I can talk about publicly by nature of the fact that you're an investor, but the magnitude of skullduggery that is happening in Washington, D.C. is really incredible. And it's going to come out, if we look forward, it's going to come out, and you're already seeing it with the stablecoin bill, the scrum between the big banks who want to dominate it and the incumbent stablecoin issuers, and then there's Tether out there, not in the United States, and then just this incredible flow of money that has gone both from the banks and the crypto industry to people in DC, and they're all going to fight. And I don't know how it's going to come out. I really don't. We're going to get a stablecoin bill soon, though. That's clear.
So I think a lot of people will be like, hey, wait a second. The screen says Bitcoin Investor Week. Why are they talking about stablecoins? And they don't realize the importance of the stablecoins to the success that Bitcoin has already had, let alone the success that it will have. Talk a little bit about that relationship, and then we can talk about the bill itself.
Yeah. it is still on a daily basis a clear majority of Bitcoin trading volume is settled in Tether. So Tether is a really important part of this ecosystem, like it or not. And I think most of us like it. Most of the regulators and the banks don't like it because it's 140 billion of payment outstanding that grew up outside of the regulated banking industry. And so that's why it matters. And of course, yesterday you saw the CEO of Bank of America say, we're going to get into stablecoins as soon as we get approved to get into stablecoins. By the way, as you know, Custodia applied for the patent on a tokenized digital dollar in 2020, and we were granted it in 2022. Now, the Fed, post-FTX, way overreacted, clearly, and told everybody, stay out of it. It is presumed unsafe and unsound if a bank issues a stablecoin or touches a stablecoin. And so that's why the banks have been off to the side, and we haven't been able to use our patent. But it sounds like we will be able to use the patent, and it's going to be really fun because we're not in any of those three groups I just described: the incumbent banks, the incumbent stablecoin issuers, and then Tether.
JP Morgan launched, or said they launched, a JPM coin back in like 2018 or something. And I remember calling it the Corporate Central Bank Playbook, which was if they issued a coin that was backed 1-to-1 to dollars, just like the Fed had unpegged in the 70s, they in the future could potentially unpeg, and then they basically have a money printer machine, and what bank wouldn't want to have a money printer machine? What do you think the stable coins that these banks are going to end up issuing are going to look like? Will there be regulation that specifically says you have to keep it pegged to the dollar or other things?
Yes.
Okay.
Yeah, it's that. It's interesting because the Biden administration was trying to kowtow to the banks, and so their proposal was that only insured depository institutions could issue stable coins. They were trying to kill the entire startup industry. And the crazy thing about that is, most of you probably understand, banks run what's called fractional reserve books. They keep about 8 cents. The large banks keep about 12 cents in cash for every dollar of demand deposits, and the smaller banks keep 8 cents in cash. So every single bank, every single day that runs that business model is susceptible to a bank run. When you're keeping that little liquidity, and they're taking your deposits and turning around and making loans with them, and they're taking credit risk, and they're taking, in most cases, interest rate risks as well. That's the traditional business model. Very obvious how unstable that will be when you get crypto depositors that can be withdrawn in the span of minutes. And those bank runs would be faster than Silicon Valley Bank if we had traditional banks issuing stablecoins. So the good news is that proposal didn't go anywhere, and the now proposal is, of course, having learned from what happened at Silicon Valley, Silvergate and Signature, is that the only stablecoin issuers must hold dollar-for-dollar liquid reserves against the stablecoin liabilities. And if an insured depository institution is going to do it, it has to be in a ring-fenced bankruptcy remote subsidiary. So it doesn't need FDIC insurance, which is really interesting because the Biden FDIC was, frankly, the problem. One of the many problems, but the Biden FDIC was clearly engaging in a lot of the debanking activities that we're learning about now, but was really anti-innovation across the board. They didn't want banks innovating. They didn't want any new banks coming in. They didn't want any startups in the banking system, and they certainly didn't want anything crypto-related in the banking system. So they just did everything they could to keep it out. And now we at least have pro-innovation people coming into those jobs.
The stablecoin regulation bill that is being floated, I have seen or heard multiple versions with different things in or out of it. One thing that has been consistent throughout almost every single version that I've been aware of is it seems like they have Tether in their crosshairs, that they are trying to essentially ring fence the United States in a way.
Yeah.
One, do you agree with that analysis? And then two, good, bad, do you think that gets approved? Talk through that.
Today's episode is brought to you by Bitcoin IRA. Are you a crypto investor with a retirement account but don't have any crypto in your retirement account? Then listen up, this is for you. Bitcoin IRA is revolutionizing the way Americans save for retirement by helping smart investors diversify their savings with access to over 75 cryptocurrencies. With world-class customer service, military-grade encryption, and a vertically integrated licensed trust company, it's no wonder more than 200,000 Americans trust Bitcoin IRA to secure